Hello, everybody. I just want to give everybody a quick update. The news just came out for China. It's actually quite a big news. So basically, the news says this. Okay, that I'll read this from Financial Times. China on the brink of consumer deflation. So it basically says that now the Chinese economy is so weak right now that the consumer price inflation has hit zero. Okay, zero. Now, here in the world, we are all struggling with inflation, and there they are having a deflationary problem. Now, you need to understand both inflation and deflation are very bad. Okay, very bad. We we hear more about inflation than deflation, and it's actually quite a difficult situation. Okay, let me read to you from Financial Times. China economy here on the brink of deflation in June, adding calls for Beijing to launch a stronger stimulus package to sustain the country sputtering post-COVID recovery. The consumer price index was flat year on year and declined 0.2% compared to the previous month. And factory gate prices fell at the fastest rate since 2016 as demand for consumer and manufactured products softened. So these are real hardcore data that actually shows that the Chinese economy now is really in a bad shape. Okay, and I've been watching quite a few other reports here and there. Maybe some people say, okay, let's not trust the Western media. Chinese economy is not so bad and things like that, right? But I don't really trust Singapore media, right? So this is from Channel News Asia. China manufacturers face slow post-pandemic recovery amidst poor external demand, right? And then there was another one that says China economic growth remains uneven across the country after border reopening. And if you watch the video, which I'll try to post it on the link in the video here, the Channel News Asia reporter actually go and interview companies. He went to Shenzhen and interview all the migrant workers that are sitting at the train station and also look at the Shenzhen shopping malls in the weekend. Empty. It was empty. The hourly wages has fell from I think it's Singapore dollar equivalent is from $3.50 before reopening to now $2.50 per hour. So imagine you earn $2.50 per hour, right? It's quite serious, right? So Chinese economy right now is really in a bad shape. How did they end up in such a bad shape? And I've spoken about it many times, and I'll just quickly talk about it right now. The Chinese economy is in a bad shape, largely because a lot of number one, a lot of the external demand has gone down tremendously. It's because of the spike in interest rate globally. The U.S. and Europe demand has weakened. Europe is already in recession. U.S. is not in recession, but it has weakened tremendously, right? So it is quite a serious issue. On top of that, we have got quite a bad situation in terms of the exodus of many manufacturers away from China, because it used to be everybody is looking for the cheapest factory in the world, right? Which is China. Now after they were hit by Chinese very painful experience during COVID that shuts down their production. A lot of them has now not just looked for cheap production, they really look for reliable production. As a result, a lot of them pull out their factories, resulting in a huge fall in production capability. Couple of fact that right now China has a crash, in their property market, and their property market is one of the biggest engine of growth in their GDP. We see a real serious issue. Unemployment is very high right now, particularly in the youth unemployment. And we say youth is graduates and so on. It's at 20% right now, and that's a lot of exclusion that they intentionally not include in. So if you include in those exclusion, the Chinese unemployment rate is way above 25%. Yeah, for the youth. So if you come to Europe, you don't see many Chinese tourists. The Chinese market is all open up already. They can travel. I don't see much Chinese tourists here. I see a lot of Taiwanese, a lot of Korean. I don't see a lot of a lot of Chinese. It's very unusual, right? So I think that in Singapore, which is hoping for a big, huge rebound, right? And I think I saw a report somewhere by Straits Times or Channel News Asia that that the whole Southeast Asia was hoping for a tourist rebound from China has only seen a rebound of somewhere between 15 to 30%, yeah, instead of the 100% that they're looking forward to. So I I think we have to take a real reality check on this. Now, but someone may say, Mr. Lu, what does China got to do with Singapore, right? Or China got to do with the stock market and all this, right? Number one is that there's a lot of people in Singapore are very bullish about the Chinese stock market. I've said it many times that I would personally avoid the Chinese stock market, and I think right now the Chinese economy has crashed terribly, and I don't know when it will ever recover. It may recover quickly, it may not recover at all for a long time, like Japan. It's a world of uncertainty that because it's unpredictable. Investing in China right now is simply a gamble, right? It's okay. Some people like gamble, go ahead and gamble, but it's just a pure gambling move right now. That is unpredictable and is cannot be forecasted right now when the recovery will be, how the situation will be. But are there bright sparks in China? Of course, I think the Chinese, the Chinese right now are seeing a huge boom for the electronic cars. The boom is so much that they challenge Tesla, and right now, not just challenge Tesla, but right now the EU is thinking of protectionistic measures against the Chinese electric cars. Uh, I think, but I think that's probably the one sector that I can think is that's doing okay, right? So anyway, going back right now, I think that we want to be, I want to invest in places where I have predictability, some level of stability, that I know that even though there's volatility, recover. The Chinese stock market has have a huge spike in 2015. Until now, it has never recovered and is since then going down. I've got friends that are bullish on Alibaba until this day, has never seen the light of day for quite some time already, right? So um, most importantly is that the Singapore economy is highly linked with the Chinese economy, and as a result, if the Singapore economy will not if Singapore economy will not face a Chinese economic recovery, the Singapore economy might take a hit, and which is what I predict will happen. That they'll probably take a hit in June. If that's the case, then Singapore may not escape recession, and then with recession comes recession pressure in Singapore. So this is just my view. So will the Chinese economy ever recover? Yes. One day will recover. When? I don't know. Is it necessary for me to take that risk? Not me. Some people might, okay? But I think, is there risk to our Singapore economy? Is there risk to our economic outlook? Yes. Okay. So let's watch and see this space very carefully and see what are the flow over impact to our economy, shall we? Okay. So this is Lou signing off from Europe. Just make sure that everybody please give a like and hit subscribe and follow, and do follow us closely in our Telegram channel. We have a Telegram channel there's right now 29,000 followers. It has got a lot of community experts that are very good in finance that will give you their opinion on any questions that you might have. I think it's the best community help chat group. Okay. So anyway, This is the 1M65 Singapore, or you could just type this link. Look for Lu Singapore. Sorry, look for Lu 1M65. Lu 1M65, and you'll probably find it in Telegram group. Okay. With this, thank you, and I'll see everybody again tomorrow. Okay. Thank you and goodbye.